Hi, it's Brad Flynn here. Today we're going to be taking a look at some of the business fundamentals that are important for your success in business. Now, most people are aware that in business we look at the financial side of things through what we call the financial statements. Today we're going to be looking at one of those statements, which is also known as the profit and loss statement. The other two statements are your balance sheet and your cash flow statement. So we're going to look at those in a separate video from now. But fundamentally I wanted to ask you a question. When you play sport or a game of some kind, how important is it to keep the score? How do you know if at the end of the game whether you've actually won or lost or how you've played the game? Only way to do this is with the scorecard. Now in business, one of the scorecards to see how you're playing the game is your profit and loss statement. In terms of what language people speak, in Italy we know of course they speak Italian, in France they speak French, but in the business world we speak numbers. More primarily we speak accounting to know how we're playing the game. And so today is about giving you a better overview of how to read a profit and loss statement regardless of what the business is. Because the way they are designed is pretty much universal for any country in the world. If you know how to read one financial statement, one profit and loss in one country, you can read it in any country or in any business in the world. Alright, now I want you to think of things in a time perspective. So we've got the past, the present and the future. Now the three financial statements that I mentioned before each fall into one of those categories. The profit and loss is all about the past. It's the end result for your business. The balance sheet is about what's happening right now in your business, and then the cash flow projection, which is separate to your cash flow statement, gives you an idea of what's going to be happening in the future. Alright, so let's delve into your profit and loss statement. Now as I said, all profit and loss statements have these 5 broad categories. First of all, we have the revenue, which is also known as the income or the sales of the business, that is always at the top of your profit and loss statement. Secondly, we have something called your cost of goods sold, sometimes called your COGS. It's also known as your variable costs, and these relate directly, as the name suggests, to what you've sold. Thirdly, we have this thing called our gross profit or our GP. Then we have our fixed expenses, and then we have our net profit, which at the end of the day is what business is all about, making a profit. So let's go through these individually. Now one of the things you'll notice with profit and loss and all financial statements is they all have different names that refer to the different areas of the actual statement. A profit and loss statement is sometimes called an income statement. Sometimes it's called a profit and loss, as the name suggests. There's a couple of different variations on it, but if you are clear on the profit and loss statement and pick one of those strategies, then just stick to that as you go through. At the top here, the first item is our revenue. So how much money we bring into our business from a sales perspective. Now I've run some numbers here so that we can go through this as an example. So in this particular business, and a profit and loss can go over different time frames. So a profit and loss can be for a week, a month, quarter, a year, or whatever. Generally speaking, as we're running our business, it will be on a monthly basis. So our second item here, cost of goods sold. Now that refers to what it costs us to buy whatever it is that we're on selling to our clients. This is also sometimes known as your variable costs. Now it's called variable because this particular line will vary greatly with how much you sell. The more that you sell, generally speaking, the higher your cost of goods will be. Third item down here is your gross profit. Now sometimes people will get the profits mixed up. Their gross profit and their net profit are two completely different things, okay? Gross profit is what's left over when you deduct the cost of the goods that you sold from the revenue that you took within your business. So in this instance here, this particular business had an income or sales of 500,000, and the cost to produce those sales was 250,000. So 500 minus 250 gives us 250,000. So our GP or our gross profit is 250,000. So that's what we use to run the rest of the business. Okay? The next item is our fixed expenses. These are sometimes called overheads within your business as well. So our fixed expenses relate to costs that generally are fixed on a month-by-month basis. So your rent, your wages, your telephone bills, your insurances, all of those sorts of costs. And business coaching, of course, is a fixed expense. And last but not least is the net profit, the bottom line. So one of the easiest ways to remember the difference between net and gross profit is you can imagine that, as the name says, the net is what's at the bottom of your financial statement to catch all your profit. That's what you get to keep. All right, so let's go through these numbers in a bit more detail. We know what our gross profit is. Now, for our fixed expenses for this business, it costs us $200,000 just to open the doors. This is before we've even sold anything. So this includes, as I said, rent, wages, phone, electricity, all those things that we know are going to happen that don't directly impact what we're selling. Now in this instance, we've got fixed expenses of $200,000. So our net profit equals our gross profit minus our fixed expenses gives us our net profit for this business of $50,000. So just quickly again, gross profit equals revenue minus your cost of sales, and your net profit equals your gross profit, your GP, minus your fixed expenses. So it might be worthwhile, if you want to now just pause the tape, go and have a look at your own financial statement and start to see how all this hangs together. Now you'll notice over on the right hand side there, I've put some percentages. Now in financial statements, generally when we're working with percentages, particularly in the profit and loss, everything is referenced back to the sales. So obviously, as a percentage of our sales, 500,000 is of course 100%. Now our GP, you will quite often hear GP expressed as a percentage. So in this instance here, our GP is 250,000 out of 500, or a half, or 50%. So our GP is 50%. In this business here, the fixed expenses are 200, and as a percentage, that's 40% of your sales. In particular, one of the things that we need to look closely at in your fixed expenses is generally your wages. How much of your wages are making up a percentage of the total sales turnover. And last but not least here, this business has made a net profit of 10%. 50,000 as a percentage of 500,000. Now I'm not sure in other countries, but if you're in Australia, you can actually go to the ATO website or Google ATO benchmarks, and for all the different types of industries and businesses that they collect records for, you can get an idea on average, based on the business size, what split there is between these different elements of a profit and loss statement. Talk to your coach or me if you'd like to know more about that. Okay, so now that we know our percentages, let's just briefly touch on different businesses and how their profit and loss statement might look. If we were to take a business that sells widgets of some sort, say for instance cameras, then the cost of goods sold is going to be, depending on the type of markup the business has, varying, as opposed to a business that sells time. So if you look at an accountant who don't actually hand over a particular product or service, then the GP for an accountant is going to be very high because their cost of goods sold is actually low, which means that their GP is high because it doesn't cost them anything to produce their sales. They don't have to buy things that they on-sell. In between those two extremes, we might have, say, an electrical contractor who sells time and products. So there's going to be an element of cost of goods sold, things like PowerPoints and lights are going to make up this part here, but there's also an element of time that they're selling. So many dollars per hour for the electrician to do the work, and that will be falling into your fixed expenses. So check out the ATO benchmarks to get an idea of how your business is positioned with regard to other businesses within your industry. So in terms of a profit and loss, this is the big picture and largely what you need to keep an eye on. We've set targets for your business based on certain end of month, end of quarter results. So we need to be regularly checking at least once a month if we're on track to hitting those targets. Now, if for some reason we are not hitting those targets, like in a game of football, If you can imagine, this is like the scoreboard standing up on the hill with the clock and the two team scores. Then what we would need to do is delve down into some of these areas and find out what went wrong. Like in football, we would delve into the statistics, maybe missed tackles, maybe errors, maybe line breaks, whatever it is. Generally, they will be in your fixed expenses and your cost of goods sold. So, hopefully that's given you a better idea of how to understand your profit and loss statement. In the following videos, as I mentioned, we're going to look at your balance sheet, your cash flow statement, also something called your cash flow projection. It's what I call your sleeping tablet, so that you know you're always going to have enough money in the bank for at least the next 3 months. The other thing we're going to cover off is something called break-even analysis, which is particularly important when we start the coaching process or when we're going to invest any sort of money in growing your business, to make sure that we're going to recoup that investment, whether it's marketing or new products, and that we're also going to get some interest on it when we make that investment. So hopefully you've got some good value out of that. I've enjoyed presenting this to you. If you have any questions, talk to me in the coaching session. Otherwise, have fun with your profit and loss statement.